All right, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And as you can see, we are back from Cayman Island. We are back in our offices. Today is Monday, October 17th. And last week, we had one of the biggest reversals in history on Thursday. But then the markets were falling again on Friday. So what does it mean? Will we see a rally this week or will the markets crash? So we will talk about what to expect and show you how we are trading these crazy markets. So as you can see, there's a lot to talk about and we'll get started right away. But if this is your first time here, hi, I'm Markus Heitkoetter, that super smart guy. Over there is my head coach, Mark Hodge, and we're real traders who trade live accounts. And therefore, we got a lot of trading experience and we're showing you how we trade these crazy markets. So trust me, we know our stuff and we are not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And geez, I mean, Mark, what a craziness in the markets here. I mean, on Thursday, this huge reversal, then on Friday dropping. I mean, what the heck?
Yeah, I mean, talk about volatility. I mean, these type of swings are just huge, and traders coming off of or that Thursday, that response to hotter than expected CPI data looked like the bottom was falling out of the market, and then you have a huge reversal. Things were looking really good going into Friday's session, and then a down day. Uh, Now the S&P down 4 out of the last 5 weeks. But Marcus, you had mentioned that some numbers actually supported Friday's move lower.
Yeah, I looked at it. So, I mean, so a similar pattern for the S&P 500 that we saw here, where we had this massive drop. I mean, throughout the day, the Dow rallied 1,500 points, and here the S&P was down 2% and then up 4%. And a similar pattern, we had it there in March 2009 after we had the reversal after the financial crisis. December 2018, this was the last mini crash that we had. And then, of course, March 2020, the big crash, the COVID crash here. And so this move only happened 5 times in history. And last Thursday was one of them. Now, before that, the 4 times, 3 out of the 4 times, we saw exactly what we saw on Friday, that markets were lower. But then 4 out of 4 times, we saw that the week after and by the end of the month, markets were higher. I mean, that's pretty much what we see here this morning. I mean, this morning, markets opened higher and drifted higher.
Yeah, so a pretty nice follow through. We're really kind of trading around where we ended up Thursday, but considering the pullback on Friday, which really put the markets lower for the week, nice to see that jump and nice to see things bounce back.
Yeah, and we talked about it this morning with our mastermind members because we were trading this, and we'll talk about our positions here in a moment. And you were looking to sell calls for Nvidia for Google, and
Yes.
this is where I said, okay, we'll have this push higher, and then I believe that we are just diddling along, that we will finish higher today. But I said the Nasdaq probably between 3 and 3.5%, the S&P around 2.5%, and the Dow around 1.8 to 2%. So I do believe that the markets will drift higher, but we don't see this massive up and away here.
No, and but at the same time, I think that this type of movement actually is to be expected, right? Yeah, this huge reversal on Thursday, and then a pullback. I thought the pullback was a little overdone, a little bigger than I expected, but it would be normal that you get this huge move and then a little bit of a pullback going into the weekend. And now with the weekend out of the way and a new week of trading, light on news, big on something else, and then the positive start. I think that this type of move actually is good. It's not going crazy at this point in time, even though we're up 2%.
Yeah, and I mean, as I said, light economic calendar. We had the Empire State Manufacturing Index coming out this morning, worse than expected. And right now, bad news is good news because we know that the Fed wants to slow down the economy. And so that helps. And nothing else. If you look at the kind of economic calendar this week, not a whole lot going on. Nothing tomorrow. I mean, all of these are yellow flagged reports that have a super low impact on the markets. Nothing on Wednesday. The Philly Fed Manufacturing Index on Thursday. But I mean, right now, the eye is on inflation, and there's nothing going on here this week.
Yeah, I would say that with the like you said, eyes on inflation, that CPI report kind of supersedes anything else this week. If there's positive news, bad news meaning good, I think that could be a catalyst for the market. But I don't think there's going to be any shockers on the economic calendar that's going to move the market. And this is where traders turn their attention to earnings.
Earnings. Dun, dun, dun. So earnings are kicking off this week. So this week we have a little bit over 60 people, 60 companies, not people, 60 companies out of the S&P 500 reporting earnings. So we do have some recognizable names on there. Today after the bell, it will be Goldman Sachs. Today before the bell, it was already Bank of America. Bank of America reporting better than expected earnings. Want to talk about this?
Yeah. So Bank of America, nice little jump there. They reported better than expected results, and they said that the profits were falling, but their earnings beat forecasts.
Yeah. So, and I mean, this is pretty much in line from what we saw last week from JP Morgan and Wells Fargo. So that helped already. You see here a huge day on Thursday for Wells Fargo after reporting earnings. So nicely up here. We had the same with Wells Fargo, and we'll see what Goldman Sachs does after the bell. Right now, reaction here is rather muted because traders are waiting. But then we also have Procter and Gamble. We have Tesla reporting earnings, and Tesla will be interesting. We talked about it this morning with our mastermind already.
Yeah, Tesla this week could be a big one. And Marcus, well, go ahead. You mentioned you had something to share with Tesla.
No, I mean, Tesla, we know that Elon Musk right now is probably being forced to buy Twitter, and he said that he wants to go through. So this is why recently the stock got a beating. I mean, the markets were
Sure.
overall down, but also here the stock is massively down because there's rumors that he might have to sell more shares to finance the Twitter deal. And I mean, we already went from 310 to 200. I mean, that's a solid 30% drop. So we'll see what Tesla does. I mean, we know that Tesla is a heavyweight in both the Nasdaq and the S&P 500. So when Tesla sneezes, the market could get a cold. I think this will be an important one, and this is on Wednesday coming out. And then we also have Netflix reporting
Yeah.
earnings. And we know that Netflix, if you look back at a weekly chart, gosh, they got beaten down here over the last 2 or 3 earnings periods, coming from around 690, trading below 200 recently. So coming back up here, and this will be interesting to see.
Yeah. Do you think their lower ad supported service is gonna be a bang?
I don't think so. I don't know, but I'm also not the target market for the lower priced ad supported. I hate it. Even you see, Amazon Prime sometimes has these free Vs or something like this, where you can watch something for free if you watch ads. Even then, I'm buying the show because I'm so over ads these days. I mean, the streaming services have really ruined us if you think about it. I mean, Netflix, that's where it started. Never had any ads anymore. Amazon Prime, the movies, no ads. Disney Plus, no ads. Hulu, if you have the higher priced paid subscription service, no ads, and that's what I'm used to these days.
Sure, sure. Hey, Marcus, I want to have one correction here. Goldman Sachs is reporting tomorrow before the bell.
Oh,
So
it's
you'd
tomorrow.
mentioned it
Okay.
was after. Yeah, I just wanted to confirm that.
Yeah. Anyhow, so that's what's going on. So right now, markets drifting higher on no real huge big impulses. Right now, we're going back to where we opened. Sorry, that's Goldman Sachs. I wanted to go to the S&P, but even here, I mean, we had in the first 5 minutes the move higher, and now we are diddling along there. So I mean, let's take a look at some of our positions here because there is definitely a few interesting things. So let's talk about Marriott first. Marriott, last week we sold the 133, and we did, this expired worthless. So right now we don't have any more Marriott puts. They expired worthless. This was a nice trade. It was a nice, quick, easy trade. which right now trading at 147. On Friday, we closed at 143, I
Yeah,
believe.
we had quite a few people using the software pick up Marriott puts because you had the 133 that we sold, and then during the dip there was also the 131. I think even the 128. And to me, it's just a nice wheel stock, at least for now.
Yeah. Today we don't see much on our scanner, and that's normal because we're scanning for selling puts. And today, when the markets are up, the premium for puts are rather low. So this is why there's not much popping up, which is good. Keeps you out of trouble. I mean, this morning with the mastermind, we were trading for an hour, and after the hour, we said, you know what? There's nothing popping up. If you didn't sell puts on Friday when the markets were massively tanking, you have no business selling puts today. So absolutely not.
Yeah, be careful. Like the our rule of thumb goes, sell puts on down days, sell calls on up days, and 99% of the time that's going to put you in the right place.
Yeah. Now, talking about selling calls, I mean, we both have a position in Google. You got assigned at 104, 1 and
One,
350, 1 and
yeah,
350. I got assigned at 108. So right now, for me, nothing to do here, but you were looking to sell calls this morning.
yeah, and I'll have to be honest here. Last Friday, I over well, I missed this one because there was an opportunity to get 90, 95 cents on the 104 calls for this week, and I really, really wanted to get that. I put in an order for a buck. The high of the day, someone got 96 cents for those. So I was a little too conservative trying to, or aggressive, depending on how you want to look at it, trying to squeeze out that extra premium. Today, I got in at 55 cents for this Friday, so I didn't get that overnight, or sorry, the weekend extra premium there. But I'm happy with bringing down my break even another 55 cents.
Yeah, and I mean it's 38% annualized, so I mean not a bad trade, and especially we talked about it. I mean in the beginning, especially with Google jumping higher, there was some volatility, and right now the volatility is probably getting sucked out of the markets. I mean, how much is the actually can look it up here on the software how much this is trading for right now. So the 104 is trading at 47 over 49. So you're
Yeah.
basically already up what 10% on this
And
one within
yeah,
what
and
half an hour.
and to be honest, Marcus, I want to say that Google was at around 99.75 when I was filled at that 55 cents. So we're actually trading higher, and the premium's lower. That's why I really like to look at opportunities early in the trading session. I know some people they say, "Oh, you got to stay away from the market open because there's indecision and things are crazy." I like crazy when I'm selling premium.
Absolutely. Absolutely. By the way, right now it says no options found because the earnings date is before the expiration date. So Google has earnings in 8 days, and therefore we don't like to sell puts going into the expiration. But here for selling calls, that's absolutely fine. All right, let's keep going down the list. So we talked about Google. For me, nothing to do. I have to wait until it pops a little bit higher. So right now, I cannot sell the 108 Marriott, expired worthless. So we are removing this. NVIDIA, super interesting. So NVIDIA, originally, I got assigned at 195. And then last week, I was flying a rescue mission, which the first rescue mission is bringing down my cost basis to a more manageable 160.91. So I like this better, and my break even right now is at 147. So obviously, right now, still down on this one, but I don't need to wait until it goes all the way up to 195. I can sell calls between my break even and my cost basis here. And I mean, we've been doing this on LVS here. Last week or the week before, and we talked about it in these videos. So I'm planning to bring my cost basis down a little bit more. I would like to have it in the 140s because then I believe that if we do have the October rally that we often see, I might be able to just unwind this whole position here in the next, I want to say, 3 to 4 weeks probably. It'll take a few more weeks for NVIDIA to go up there, but today, a nice move higher, already 4.5%. So that's looking better today than it did last week.
Absolutely. I like that move.
Yeah.
And there were
So
questions from traders about me and AMD, and I'm seeing if we could get a little more downside on AMD.
right. So you
So
haven't
with
flown a rescue mission just yet, because for you, you didn't really see the support that you want to see at a level where you say, okay, I'm flying a rescue mission. Because we're flying a rescue mission when the stock is down around 30% from our assigned price, or at least, let's say, that's when we start looking at it. We don't do it at all before that. And right now, I mean, both NVIDIA and AMD have been down more than 30% from our assigned price. But then this is just a guideline. We want to see that we see some solid support, and there's no support just yet for NVIDIA, for AMD. Might be, I don't know, later this week or next week when we have a few more bars that you see some support there, maybe 55 or 56.
Yeah, it does look like short term there could be some support around that level. Longer term, I was wondering if we could get down to 50, 52 because longer term support going back to 2020, it looks like we had this range towards the end of 2020 between maybe 50 and 57, 58. So if we do drift down to that lower part of that range, that's what I was looking at. So I'm still
Yeah.
waiting.
And there's often a discussion about these rescue missions, whether it makes sense to fly a rescue mission. And that's, of course, completely up to you, whether you want
Sure.
to lower your cost basis, as I did here in NVIDIA, to be able to unwind this position quicker. Or if you say, no, I don't want to do this. So, I mean, there's no right or wrong. There's what is right for you. But if you would like to learn more about these rescue missions, we did a video on this, and I'll link to it right here so that you can take a look at this and then decide whether it makes sense for you to fly rescue missions, or if you say, nah, I'd rather wait until the stock comes back. Either one is good. We show you what we do right here. So take a look at this video, and we'll see you tomorrow.
Happy trading, everybody.